Hello, and welcome back to Beyond the Transaction, Skies is the Limit, where we take a deep dive into the colorful world of marketing, branding, and customer experiences. This podcast series delves into transcending mere commercial exchanges and uncovering the stories of individuals who are shaping the way we experience beauty and functionality. Today, we have a seasoned navigator in the world of payments, Pat McCammon. Pat brings a wealth of experience, having worn many hats from managing director, general manager, and advisor to his current position at Skizer as the sales director. With a keen eye for business development and a knack for globalizing New Zealand's tech innovations, Pat has been a driving force in shaping the landscape of payments in New Zealand, Australia, Southeast Asia, Africa, Middle East, Canada, and the USA. We'll dive into Pat's remarkable career, into the nuances of navigating the dynamic terrain of payments, and explore the intricacies of local industry and the challenges and opportunities that small to medium businesses face. In this episode, Pat shares his insights acquired through years of experience. It's simply a masterclass in the New Zealand payments landscape and a discussion on what the future holds. Welcome to Beyond the Transaction, where business goes beyond the surface and every transaction tells a story. Pat, thank you for joining us today. Let's dive in.
Yes, good morning, Katie. Thanks very much for the invite. It's a pleasure to be here. When you invited me to come and chat with you this morning, I made a few notes and I thought, gosh, that's enough. Well, it wasn't enough, was it? So I think to try and be on point and answer some of your questions and make this as informative as we possibly can for the listeners, I thought I'd just kick off with really just breaking down what payments are all about. In some regard, some of us actually think that payments are actually pretty straightforward, and some businesses think it's quite complex. So starting with the consumer, and there's really four categories, I guess, of items I'd like to talk about. So relating to payments from a consumer perspective can be either very singular in the sense that we all have our preferred way of payment. So for an online payment, for example, we're happy to do a bank transfer or a credit card. For our physical shopping experience, happy to use a debit card, credit card, and often, more increasingly so, some form of digital payment, like a QR code or indeed some sort of wallet. From the merchant perspective, life can be a little bit challenging, particularly for the medium-sized enterprise sector. Corporates, I probably won't really go too much into this morning, but certainly from a SME's perspective, merchant payment processing, again, can be a little bit overwhelming. And I'll try and explain what I mean by that. If you are a new business setting up, it would historically be a natural thing to do is to approach your bank to facilitate payments. And that's not a wrong thing to do at all. But that actually could be quite limiting as well, because not all banks actually have all the forms of acceptance available to a retailer today. It is increasing, which is a great thing to see. But again, from a merchant perspective, is that you would be forgiven to think that all you need to do is enable, a debit card and credit card payment. However, retailers are realizing, and this applies to e-commerce retailers as well as actually physical retailers, that the consumer actually drives the world of acceptance. So again, you could be, forgiven to think that all you need is to put an EFTPOS terminal in and accept debit and credit. Consumers today will continue to drive the demand for ever-increasing number of different forms of payment and acceptance. I'll talk to that a little bit more during our conversation this morning. The third aspect of this, of course, is the financial acquirers, the financial institutions, the banks themselves, etc. World for them is relatively rehearsed in terms of how they enable. They generally break payments down into two basic categories. There's the issuance of cards to us as consumers, and then there's the acquiring of those transactions via those cards into merchants. Probably a big subject in itself. The fourth dimension of payments really is who carries the transactions. And most countries, there's a telco involved. So increasingly today is with the mobile payments and backup of mobile payments, there's usually a telco involved. The fifth dimension to payments, and one of the major player, of course, is the gateway providers. So you have a consumer relationship in the payments world. You have a retailer relationship. You have a bank acquiring financial institution relationship. You have a telco relationship and a gateway. The gateway in our country, in New Zealand, most of us know a company called Paymark, or now known as Worldline. The Worldline provide a platform of debit card and credit card services. Not to be confused with an acquirer, because the acquirer actually in this particular context of conversation is actually the banks.
You're basically illustrating the multiple, not only players that are involved, but all their different perspectives go into this industry. But really, I mean, as you touched on in the beginning, it is driven by the consumers. The
conversations that I have quite regularly, particularly with retailers in asking, my advice on where's the future of payments, I usually find myself answering that from the consumer's perspective, which I think is on point and quite relevant today because, again, in the earlier days actually of, my recollection of being involved in the early part of setting up payment systems in New Zealand and Australia is that, inherently you would involve a bank and network provider. Today, you've got to involve a lot more. So the dimension here is to recognize the fact that when we talk about payments, it's not necessarily just payments for the consumer. There's actually 5 players that really need to be involved to bring all this together in a successful, progressive manner.
Can kind of come across as some complicated process and almost unapproachable for consumers to dive into.
Yes, that's very true. In fact, you could, on one hand, you could say that not much has changed in the payments arena. On the other hand, I think it would be fair to say that we're about to see significant change in the consumer behaviour, which of course will enforce and introduce opportunities for retailers to change. I think that's the biggest thing that I see very, very exciting actually in the foreseeable future relating to payments from a merchant lens perspective.
I would love to get a little into your background, Pat, seeing that you've been across the world in different payments industries. Can you provide an overview of your opinion on what you think the payments landscape is like in New Zealand, especially compared to those other places that you've had experience in?
Yeah, that's a very good question. New Zealand has been unique in setting up its payments infrastructure, and it does go back to many years ago. New Zealand started off back in the 80s with a central clearance facility for consumer checks for retailers. So it was one of the very few countries to adopt a central clearance process for all different types of checks. So if you were with ASB, you were still able to write a check and for product and services with a retailer that actually only banked with BNZ, for an example. That actually what makes it very unique. So that methodology of a single processing platform was a perfect place to digitize the process of clearance of checks. So for making payments, and the electronic transaction processing world really has grown from that. And
I was going to say, sorry to interject, but that's one thing I've noticed just being a consumer in this payments industry, having traveled back and forth between the US and here. In today's age, you have to download an app in the US in order to exchange money. While in New Zealand, it's run of the mill, bank transfer, no matter what bank you're with. I could see that parallel just down to the early days of the check, as you were saying.
Yes, and it's ironic, isn't it, when we think about referencing checks. I mean, I don't know anyone that actually writes a check for consumer, purchasing for product and services today. And it seems to be very old hat. But this is what also gives New Zealand the unique aspect of payments when we compare ourselves, even to across the Tasman, even to when we talk about FPOS in New Zealand, FPOS in Australia is radically different. And again, we probably don't have too much time to go through that in detail. But really, the major point of difference is that in New Zealand, we're used to what we call proprietary debit versus scheme-based debit. So in other countries, when we talk about debit, we really only talk about a card-based debit or accessing a debit account via a bank card. The payments world in New Zealand, when we refer to proprietary debit, is relating to I've got my card, I've got my debit account, and I'm accessing my debit account using that card, and it doesn't attract fees relating to Visa or MasterCard. Visa and MasterCard, as significant payment methods, has their own debit version. This is what we call scheme debit. Of course, a credit card is a credit card, but now we're also very commonly accepting the fact that our Visa and MasterCard have multifaceted capability, whereas that we can access a debit account or a credit account, and many other types of accounts, again, offer Visa or MasterCard.
Even though the payments industry seems to be a global aspect in terms of currency exchange, and you would just assume that everything kind of works in the same sort of structure, even given how small New Zealand is, they have their own unique way of doing it, so much so that, as you said, Australia is completely different in the way they operate.
Yes, and Australia has been only 10 to 12 years since they've adopted a similar process relating to debit. And it was set up via, again, a consortium of the bank relationships. But even today is that debit in Australia, from a consumer and retailer perspective, the fee structures are different to what a merchant would pay in New Zealand, and also the consumer fee structure. Often New Zealanders when we refer to debit in New Zealand, we often call that free debit. It's not quite, it's free from a consumer's perspective if you're using your debit side of your card, if want of a better way to describe it, and accessing your debit account. Whereas that if you're using your Visa MasterCard and you're accessing your debit account, you're actually using the proprietary nature of your Visa or MasterCard, but still accessing a debit account. There are different fees associated with that. And again, this is something for consumers to be aware of, and this is quite a topical item in recent days and weeks, is that the subject of surcharging. And it's also brought out a little bit of an education process for the consumer in understanding, why am I being charged a percentage when I'm using my debit card if I use contactless processing? That's simply because that the contactless, being PayWave, PayPass capability off your card, is actually the scheme part of your card, issued, managed actually by Visa and MasterCard. So there is a different fee associated with that. That's why that the likes of the Commerce Commission are talking openly about fee structures and suggesting to a consumer, if you don't wish to pay the surcharge and you wish to pay by an EFT card, EFTPOS card, you should select your debit function off your card that will actually have zero fees relating to surcharge. So in other words, it goes back to, what side of my card should I use if I don't want to be charged the surcharge? I should just use the debit part of my card, but not my Visa MasterCard debit.
I think that's a perfect explanation of how that actually works. Now, I would love your opinion. Based on your experience, what is the solution? How do we proceed with this?
Yeah, that's a very, very good question, and one I should be careful in how I answer. My observation is that it's the right question to ask. So it really boils down to, what's a fair percentage to be charging a consumer? To quote the Commerce Commission directly, is that, in their opinion, is that surcharging is a way for a retailer or a business to recoup costs associated with implementing PayWave and PayPass. I recall when Visa and MasterCard launched contactless in Australia, their fee structures were relatively flat. In other words, there was very, very little on charging of those fees. Therefore, the uptake from a consumer experience was actually very, very high very quickly, which was a great success for Visa MasterCard in relating to contactless payments. New Zealand, for reasons I don't particularly understand, is that they chose to actually make it a different fee structure. It was only a period of time before the consumer realised that if they're going to use PayWave or PayPass for a convenient way to make payment using their Visa MasterCard, is that it was a surcharge. And some retailers today have taken the opportunity to margin that surcharge. So in other words, what fee that they have been charged, and then put a margin on top of the fee, opposed to what the Commerce Commission, as I understand it, are promoting, that it should be a method to recover costs, not to margin by charging an additional fee over and above the surcharge. It's a little bit of an emotional conversation right now across the industry and also across the retailer, which is fair. But I think to answer your question is that that's my understanding of what the Commerce Commission are actually promoting is transparency, fairness, and above all, the responsibility is really on the retailer to adopt or to educate themselves about what's appropriate and how to recover fees.
I see this heavily from the consumer side. I would say that my only criticism with the news coverage of it is that call to action was for consumers to, when they see a surcharge, to ask the merchant straight up, why is this surcharge so high? Why is this 2.5%? To ask that uncomfortable question. It's kind of unfair to put that burden onto the consumer to ask these questions. You know, nobody loves a surcharge. Nobody does, but we love the convenience of tap and walk away.
Absolutely. I mean, it's you're 100% correct on that. And of course, the irony, Katie, is that contactless payment methodology really was born from the initiative of queue busting. On one hand, a retailer will implement contactless to process consumer payments quickly, only to find that awkward experience where a consumer says, I'm sorry, why am I being charged a percentage? It's queue developing, in my opinion, which is particularly unfortunate that actually occurs. And my view is that hopefully through education is that this really comes down to a retailer doing a little bit of their homework, understanding that if they are running their business in an appropriate manner, that the path of least resistance for them from a consumer, and remember the customer journey is really what we're all about and what we'll talk about a bit more detail this morning, to improve the customer experience, use the technology that's available, be transparent with regard to we do have a surcharge on certain payment options, payment types, but try and reflect a recovery of cost, not put a margin. Again, is that a retailer should really understand what rules and guidelines that exist today. Who's to know what the rules will be in the future, and should it be mandated, should it be regulated? I think, again, for transparent purposes for a retailer and consumer, I think a clear, concise, published guideline I think would be beneficial to the consumer and the retailer. Is really more about what are the challenges that retailers, and certainly there was a bit of education on surcharging. Interesting point that I'd like to share. Over the past 5 years, the growth rate of electronic transactions have nearly tripled in the growth of payments revenue. And that's actually a direct quote from McKinsey's Global Payments Report. So that just tells us that the growth of electronic payments, and I'll dive into sort of breaking down that a little bit for the listeners as well. From the early days, the payments sector had already gone through roughly 3 distinct eras. The new era that presents itself to merchants and banks is really what we would like to talk about a little bit more in detail this morning. A good example of this is cross-border payments and the dynamics of cross-border payments. This is $150 trillion per year sector. That's 13% increase from the previous year. So that's cross-border money. So that's basically us shopping online, buying goods and services actually offshore, paying for it from a New Zealand account, and via traditional and non-traditional methods of payments. That's growing. So there's some learning in here for a lot of businesses and even SME businesses as to how they can get involved in that cross-border payments. And one thing that we've seen over the last few years since the pandemic, we've seen it pick up again, and that's QR code payments. Another good example of what I define or what I refer to as non-traditional. I suspect that the e-commerce trading is really driving this significant increase in cross-border payments. A couple of other relevant statistics, and I don't often like using statistics, but I think in the concept of this morning's conversation. It may be a way just to give us a little bit of colour to, exactly what we're talking about here. 40% of consumers have used a digital wallet. That's interesting, and I actually think that percentage is very, very high. A digital wallet is, often people may know it as Apple Pay, Android Pay, etc. But there are an increasing number of digital payments, and wallets are a good way for consumers to actually transact at a very, very low fee-based process. In some cases, zero fees associated with using an electronic wallet. I'll talk on that in a little bit more in detail in a minute or two. 1 in 3 consumers are prepared to switch payment channels. Again, that's interesting. So inherently, I'll use my debit card or my credit card or my scheme credit card or some form of direct payment for online services. That's suggesting that a lot of consumers are prepared to actually change and use a QR code or a wallet or some other form of digital payment. And I suspect that will just continue. The other stat I'd like to share is 42% of the consumers would consider paying a bill with an alternative payment method. So when we talk about paying bills online, this is something that is increasing. Again, it's a topic of education, because as a consumer, I might pay my utility bill with a Visa or a MasterCard. But today, we've got all forms of electronic payment options that are secure between me as the consumer, and I might want to pay a bill online. And that's, again, the fees are often less than using a traditional credit card. That's what's driving that increase of 42%, I suspect. So what does all that really mean in the world of payments? Online EFTPOS is actually something that's becoming more and more prevalent, and that's actually, in my opinion, is a good product, primarily because, again, most consumers are comfortable with accessing their own debit account and by a card. But of course, with the technology now that allows me as the consumer to be encrypted securely in an online space, which is paramountly important, I can actually now access my debit account as an online without physically using my card.
Across your experiences, I'd love to know, you've likely encountered various regulatory challenges. How do businesses, especially small to medium enterprises, navigate through the complex landscape of regulations in the payments industry?
Yeah, another good question, Katie. Compliance is an interesting subject. Most of us reject red tape and fees associated with compliance. However, there is profound and good reason to have compliance and regulations, particularly when fraud is on its increase. And this is something that, in the online space, any retailer and consumer for that matter, and we hear increasing concerns about people's account being accessed illegally and fraudulent transactions. So I think there is certainly compliance and regulation. What we do need to remember, of course, is that what we take for granted is a traditional transaction using an EFTPOS card to an EFTPOS machine or an ATM. You are encrypting that transaction. So you're safe, we're safe. That particular payment device is encrypted to a network. That network actually is encrypted to a financial institution and to a processing capability. And that processing capability is encrypted to a payments provider or a scheme provider, such as a Visa or MasterCard, etc. So I think I may have mentioned as many as 4 or 5 points of authentication. So when we talk about compliance and regulation, we're talking about, I guess, an industry watchdog, for want of a better way to describe it, is ensuring that there are some disciplines in protecting consumer payments, because as consumers, we must make sure that our well-earned money is protected. A retailer, in the same manner, must make sure that they receive payment real time, if not real time, within an acceptable time frame for product and services sold, in the same way as does the provider of the product and services and the banks and gateway. So again, I'm not a fan of red tape in any way, shape or form, but I understand and I think that it's something for us to be cognizant of, particularly for retailers understanding that there are rules in place to protect them. So follow the guidelines relating to those rules, because the consumers will actually vote on their feet if they feel that a particular method of payment is not secure for them. They just simply won't use it. Some of these payment security standards are actually particularly old. The authentication technology can go back as long as 40 years. So not too much of a surprise to us to realize that our digital payments and the increase of digital payments into New Zealand from a consumer and also a retailer perspective is on the rise, as is the number of more modern ways to authenticate and to securitize the transaction, or to secure the transaction. And this is using modern techniques to protect those transactions. So as we see the increasing number of digital payments coming to the market, is that we will see new forms of algorithms that are going to protect the consumer as well as also the retailer. I don't know if many people are particularly aware, but today there is approximately 258 forms of acceptance in the world. Of course, that increases and decreases, but the majority of those, of course, are going to be digital payments. So the end does tell us that the advent of new innovation and the arrival of new innovation means that we're going to see more and more, and we're going to see an increase in number of ways that consumers can pay retailers and pay businesses. New Zealand's actually is an early adopter of a lot of innovation, and payments are no exception. So we've seen some pretty funky, pretty cool applications, platforms, operating systems, and environments being developed really to address and to usher in those new forms of acceptance. So when we talk about digital payments, we are talking about, there's always a front and a back end, as I refer to it. A digital payment could be a QR code. So the front end, of course, would be, for a retailer to display a QR code, for a consumer to actually download an app or to read a QR code via their smart device. And that basically connects them into what we call, basically in the clear or an open transaction. Interesting point, though, is that today, even when we're on our smart devices, we actually are in some form of authentication. Now, is that enough to transact securely? I don't believe it will be, of course. However, there are many different algorithms that have been created that are secure algorithms that will secure those digital payments. So, for example, one of the payments vendors called Adyen, they actually have the capability to do authenticated payment transactions, including debit and credit, like many others of the 250 odd different forms of digital payments. So to answer your question is that in a non-technical conversation, there are plenty of platforms that already exist carrying the capability, securing the consumer and protecting the retailer and indeed the industry. This is, when we talk about, again, I'm often asked, in the world of payments, is it simple or is it not so simple? I think in real terms, it should be frictionless. It should be simple. It should be intuitive, and it should also be, consumer choice driven. From a back end perspective, and what I refer to back end, I'm talking about the engine room of how it all hangs together. How this crazy world of payments actually exist, and how we make sure that we don't get left behind, so to speak. There's some pretty exciting things on the horizon there, and I think this is the area where if you stand back and you were to look on the horizon of the social media platforms, and what role they play in the payment space and the digital world of payments and acceptance. I'm sure it's pretty obvious to some people that, Meta, Twitter, TikTok, all these social platforms have either adopted or will be adopting or are looking at adopting some way of securing and offering payment options. It's just the most natural place. It's the most natural progression, I think, of the technology. Again, I think it's going to be very exciting, I think, for consumers and for retailers of what's on the horizon here, where we're able to, not just browse, but shop in a secure way and in a way that successful innovation should add value, introduce some new and exciting experiences, and be more affordable than the traditional method. And that's really what we're seeing and what I'm observing. This is the growth of digital payments. So again, referring back to the QR code payments, for those that are familiar with Alipay or WeChat, again predicated on a very, very successful social platform, migrating into payments, and there's very few WeChat Alipay users that indeed will actually use a Visa or Mastercard in a traditional sense. That's the growth and the power of, if you simply blend a community of millions and millions of users, tens of millions of users that actually wish to browse, communicate, and make payment. Of course, it's a perfect place for digital payments to evolve. And that's, I think, where the major growth will come from. So coming back to some of our previous conversations around, well, what does this mean to retailers in New Zealand? That just tells us that to be prepared for increased number of different forms of digital payments. Not all will be introduced, but a good number. And again, to be on point here is that consumers will become aware of these digital options available. And again, it's the demographic, it's the youth of today actually will be driving that heavily because they don't like fees, they don't like red tape, they don't like compliance, they don't like dictation, they do not like compliance to a particular institute or institution. So if they can communicate, purchase, and pay in a digital world with very effective low fees, then of course that's where the world's going to end up.
What would your advice be to these business owners?
Yeah, this is a good point. And my advice to retailers is that most businesses today have credit where credit's due. They understand enough about their businesses and their customer expectations. My advice is in twofold. First recommendation is for a particularly SME retailer, be a little bit detailed and ask some questions of when you approach your payment provider, and often a retailer will be looking for purchase an FPOS terminal or rent an FPOS terminal. They'll be wanting to access merchant acquiring capability so they can process customers' debit and credit card payments. My advice is today we're seeing an increased number of payment vendors actually bundling their services, and it's understandable why they do that. But from a retailer perspective, a bundled service often might sound appealing because it's just easy, it's
convenience.
It's convenience, it's a little bit like, I don't want to drive to the supermarket. Yes, I'm going to save 20 cents to buy my litre of milk. I'll just go to the dairy. Nothing wrong with that whatsoever. The only difference, of course, is that when you buy that litre of milk is you're probably going to need another one tomorrow or the day after. When you sign a contract with a payment provider, usually you're locked in for a period of time. And sometimes it's not as transparent to the retailer exactly what they're paying for their rental of their FPOS terminal, what fees they're paying for processing debit cards versus credit cards, and indeed processing local credit cards versus international credit cards, and what fees they're paying for their platform. So there are three separate fee structures associated with being, if you're a retailer, what do you need? An FPOS terminal, a merchant service package, right? And usually from a bank or a financial institution, and a gateway, which basically will carry the transactions for you. Bundled services, we see an increase in that from the vendor community. My advice is to do some homework, check your options, but paramountly, I would recommend look for transparency. If you're signing a 36-month agreement, some vendors have the authority to change or contractually have the ability within that contract agreement to increase or decrease fees associated with that particular merchant. So my advice is do a bit of homework, make sure you understand what you're paying for your EFTPOS terminal on a monthly basis, understand the fees associated with processing local cards versus international cards, and also understand what you're paying for the platform for those services. In preparing for the increasing number of payment options, my recommendation is work with a payment provider that actually understands that this is a world that's changing, understand the consumer demands, not necessarily your retail business today, because your business might change. I recall recently a car dealership losing a sale of a Ferrari because the young chap walked in, agreed to purchase it, and then wished to pay with cryptocurrency. So in fact, I would love to have been on the floor on that day, because as it was relayed to me, is that the salesperson basically couldn't speak. They had no words because they didn't even understand what crypto was. So there's an example of a consumer simply saying, love your car, want to buy the car, and yes, I want to pay by crypto. And I believe it was actually 3 types of crypto. So that's a good example of, how a retailer is going to get ready for the increasing. I believe that particular retailer now is working with a payments provider that actually can enable a crypto payment. My experience in New Zealand has been with working with very large corporate retail groups. They're particularly different to some form of medium-size merchant, which really makes up New Zealand. I mean, corporate brands actually really is quite a small number compared to the mass volume of SME businesses in New Zealand. And SME businesses play a crucial role in the payments arena because of the volatility of the nature of their business. Therefore, it's quite important that they get their decisions right. So, yes, going back to your point, which is making sure they understand who they pick, who they want to partner with. Often, a retailer may be swayed to a competitive price option from a vendor, particularly if they're bundling services. This is why some of the payment providers, particularly the terminal vendors, offer 12 and 24-month free contracts. I've never experienced that. I've never benefited free money in my life, and don't know if it's particularly common. So most retailers would understand it's a payment holiday, but of course they get to pay the full term of the agreement. And often those fees, it's not as transparent in the agreement as it could be, in my opinion. So pick and work with a vendor that can provide you a competitive solution, a good, reliable terminal service. Pick a partner that actually can introduce you to a competitive merchant service provider, and a partner that can recommend a platform processing. So Worldline's a good example of that platform. The 5 major banks in New Zealand will enable all forms of payments, and pick a vendor. And I also encourage retailers to pick a vendor that's a little bit different. Pick a vendor that actually stands on their credibility, their references check out, and they're not necessarily pushing a bundled service. And my last point on this is in particularly today, retailers would regard payments to be boring. And professionally, personally, I agree with them. EFTPOS terminals are just boring. Right? Payments are boring, unless, of course, you want to dive into the background, which I don't know if you really want to. As we've discussed this morning, it's multifaceted, many rabbit holes to climb down. However, work with a vendor that actually can introduce you to, I guess, even if it's to the point that they offer something a little bit different, and that difference could be a coloured EFTPOS terminal. And the reason why I raise this particular point is that the customer journey is often, and I'm talking about the consumer to the retailer, customer journey is often forgotten about or hardly even considered. And my reference there is your customers really only care when you don't have an EFTPOS terminal or your EFTPOS terminal actually is out of order. The network's down. The terminal's failed, right? They will remember if they walk into your business or they're online and they wish to make a purchase for a product and service, and they're only to be told or instructed, please use an alternative form of payment other than EFTPOS, they will remember that experience. Positively, if you're able to leave a lasting thought, a thought-provoking journey for that consumer because they remember that you had a yellow or a pink or a blue or orange terminal, just because it's different, then that's not a bad way to start either. Because again, it all starts and finishes with the consumer experience. Today, I think retailers should be looking for a point of difference and looking to a point of difference to improve the customer journey as much as they possibly can. And we've seen this time and time again with many iterations of technology, and often the simple things, i.e. a change of color to the terminal, can actually make a difference because your customers just might remember that. My observation, Skyzer, when I first started to look at the business in detail, was that they stood out to me for a couple of reasons. One is that they look a little bit different. They, not just the color, and I refer to beyond color because I think color is just the beginning. It's tangible evidence that they care about that customer journey and what it actually, if there's an opportunity to create an experience around that colored device. But the major point that was pretty clear to me is that there's a definitive number of payment providers in New Zealand. It's a very small market. It's challenging for a payments company to maintain, a profitable business. But I believe that Skyzer have focusing on the quality of the service, the level of service with the retailer. And this is something that I heavily promote to corporates and to anybody in business around payments. Yes, make sure you're getting value for money. Make sure that you're picking your payment service provider and your terminal providers in an appropriate manner that suits your business. Pay extra attention to what happens when that terminal fails. What happens when the network goes down? What's their response time? What's their attention to you as a retailer, as a business, to ensure that you're offering your customers uptime? Because that's how to create a major point of difference in the market. Every terminal provider in New Zealand and Australia, for that matter, most of them will struggle to guarantee 100% uptime. And I'm not suggesting that Skyzer has 100% uptime. What I'm suggesting to you is that it has a very positive track record for product reliability. So compliance in the market, product reliability, it's designed and built for purpose. And we often see terminals in the market still operating after 10 years. So this is quite an important point for a retailer. It's not that it won't fail, because let's face it, these are pieces of technology. Right? Every piece of technology at some point in time will fail to some degree. But what's the SLA? What's the service level agreement around what happens when that point of failure occurs, and how responsive will that vendor be? To me, this is a big item, I think, for retailers. And as part of that is to making sure that they are paying for the appropriate level of service, appropriate to their business. If they only operate Monday to Friday, 8 a.m. to 5 p.m., then that's an appropriate level of service they should be expecting. A lot of merchants today, of course, are trading 6-7 days a week, and some are trading 24 hours. Make sure that you are that you're attracting the appropriate service level agreement to support your business. Because when you can't serve your customers, that's when you need help.
100%. Similar to a common theme on this series is that innovations often clash with regulatory compliance. How do businesses strike a balance between adopting cutting-edge payment solutions and ensuring compliance with industry standards?
Very, very good question. I know we touched on this a little bit earlier. Because payments are regulated at the highest and also at the detail level, compliance is an important part of payments, and that's for the benefit and protection of the consumer as it is the retailer, the business, and the industry itself. Doesn't mean to say that there is a trade-off to work within a heavily regulated compliant sector that you can't innovate. In fact, it's almost the opposite for payments, because innovation actually is often born by consumer demand, and that consumer demand often challenges the compliance and challenges the fee structure and the traditional methodologies and methods available for payment today. So I think it's a healthy balance to have. So if a market is heavily regulated, you often see you're using technology to actually not bypass, but actually is to work within the rules and regulations actually that have been implemented. So I think really trying to address this, I think from a retailer perspective, is acknowledging that, these compliance and the regulations that are actually set are for the benefit of all parties. But of course, is to not lose sight of the fact of, being aware and open to alternative payments and allowing innovation to come, because innovation just turns up. And again, the reason why it turns up is because the consumers we're a global community. So I think that they do coexist. And I think there is a positive and required space for both. And I can see that the digital world is just going to get wider and wider and more players, which is great, because more players, more competition, more product options, consumers will benefit, the retailers will benefit, and hopefully the fees reduce. So I think it's a healthy combination.
Innovation is essentially born out of challenging regulations. At the end of the day, you might get a better beneficial product.
Yes, that's very true. And I recall just recently quite a large corporate merchant presenting a conversation to me around unbundling a vendor relationship of some 17 years, but it's time to do something different. And I was asked, could we provide a particular type of terminal? And I asked some questions around, well, why was that particular type of terminal appropriate or preferred? And they said, well, what happens if one of our business partners actually wants to go and buy a cheap terminal out of India? Not to say they don't have cheap terminals in India, and which I found a fascinating question, because this falls smack bang in the middle of compliance versus innovation. So look, I'm all for sort of lower cost product, better service, etc. But there are particular reasons and particular important aspects of the compliance and regulation, again, because one of the reasons why you can't just go and buy a low-cost terminal off the shelf from another country is that it doesn't work for many, many reasons. One is that it doesn't meet compliance. It doesn't have the appropriate level of authentication. It doesn't protect the consumer's card data. It doesn't protect the retailer's bank account. It doesn't protect the transaction itself. Those applications that are country-specific, you can't drag and drop an application from another country into a device in New Zealand and plug it into the network and expect it will process your electronic wallet or your debit card or credit card. It's not how it works, and that's not how the industry works either. So it's very proprietary. And I understand that actually does fly in the face of innovation. I mean, that word proprietary is not a word I use a lot for that particular reason. However, the proprietary nature of the applications and the secure chipset in the devices emulates the security of the network, which emulates the security of the service. And that's paramount to everyone concerned. The minute we break that, we're all in trouble.
It's good to challenge, but it's also, as you said, there's reasons and history behind why these compliance need to be upheld. So thank you, Pat. It truly has felt like a masterclass. Thanks for sharing your experience and for the conversation. You can tell the people what you or Skyzer are up to. What can the listeners look forward to?
Yes, Katie, thank you for the opportunity. I've enjoyed our conversation, and I hope the listeners actually enjoyed as well. Certainly, I do get the sense that the next year or two we're going to see some pretty exciting things in the payments area. I believe that what we'll see is innovation, not just for innovation's sake, but for good purpose. And I, for one, I can't wait to see the multitude of coloured EFTPOS terminals by Skyzer in the market, because I think I enjoy it. It's warm. It gives me a warm and fuzzy. It's a point of difference. People talk about it. And I think the big thing with that, and I don't want to give too much away here because I'm sure some of maybe our competitors are listening, I don't know. But there is a horizon here called the consumer journey. And I'm very focused on and attentive to learn what their thoughts are around all of these subjects, because it's the consumer experience. It's the experience that particular customer has with that retailer and or business that's important for us to learn, because I think that's going to give us a clue how we maneuver to be competitive and to continue on the journey of being to be different.
Excellent. Couldn't agree more. Thank you again. This was an episode of Beyond the Transaction. Catch you on the next episode. Bye.